You see a stock trading at the limit down price and a sell wall 42 times the number of shares in issuance. Did someone make a mistake? Or is there a legitimate reason the price plummeted like that? You sense great opportunity, but you're also unsure about the risks. Either way, the clock is ticking, and there's only a 2 or 3 minute window to act. What do you do? In this video, we will be looking at an obscure Japanese trader who was faced with the type of situation I just described. With calm nerves honed through years of experience, this mystery trader took a calculated risk, which ended up earning him $17 million in overnight profits. This is the story of Takashi Kotegawa, a.k.a. BNF, a.k.a. the JCOM man. If you're interested in investing, and especially if you're an aspiring or practicing day trader, then odds are you're familiar with the life and work of Jesse Livermore, arguably history's most successful speculator, and a man who raised himself out of poverty to build a colossal fortune of over $100 million. Adjusted for inflation, Jesse Livermore was at one point worth $1.4 billion in today's money. A brilliant speculator with preternatural trading abilities, Livermore was able to predict the 1929 crash, building up a massive short position stealthily spread out across over 100 stockbrokers in the days ahead of Black Tuesday. His predictions came true, and after the dust had settled, he was worth $100 million, which is over $1.4 billion in today's money. 2 decades prior, he had carried out a similar speculative operation, on a hunch, the day before the 1906 San Francisco earthquake. By selling Union Pacific stock, he amassed $250,000 after the city of San Francisco was left in ruins. Although a brilliant man by all accounts, he experienced a volatile life, repeating a cycle of dizzying successes and crushing defeats. The constant ups and downs, and a string of failed marriages, ultimately took their toll on Livermore, who tragically took his own life in 1940. He did leave us with reminiscences of a stock operator, a fictional biography thought by some to be based on the true story of Livermore's career and trading strategies. Others viewed the book with a more jaundiced eye, believing it to have been made up entirely by the author, Edwin Lefebvre. The subject of today's video, a trader known in investment circles by the internet handle name of BNF, in many ways resembles Livermore, in that both men are mythical figures, their biographies a composite of verifiable fact and unprovable conjecture. Except that, for BNF, rather than experiencing a roller coaster of soaring highs and frightening lows, he appears to go from success to success without ever experiencing any serious setbacks. That's right. As the story goes, BNF, who miraculously has never had a losing year, managed to grow his brokerage account from around 1.64 million yen in starting capital back in October 2000, that's around $15,000, to over 20 billion yen, or around $190 million by the time the great financial crisis struck in 2008, after which period he diversified his portfolio away from the stock market and into property investment. That's a 12,000x return on investment in 8 years, the equivalent of buying Bitcoin at $1.60 back in 2011 and selling at the all-time high of $19,000 in December 2017. But in order to understand BNF's genius, we must go back to the morning of December 8th, 2005, the day JCOM, a human resources company, went public on the emerging markets section of the Tokyo Stock Exchange. The orders populating the price ladder indicated the stock was expected to open at around 900,000 yen, or roughly $9,500 per share. With 14,500 shares outstanding, this would give JCOM a market cap of around $109 million. It was at this juncture that something went terribly wrong. Someone at Mizuho Securities, hoping to sell a single share for 610,000 yen, made the dumb mistake of selling 610,000 shares for 1 yen each. The screen flashed an error message, but the trader ignored it, later saying such warnings were not that uncommon, even when everything was just fine. A couple of minutes later, the trader realized his mistake and frantically tried to cancel the order, without success. You see, the TSE, the Tokyo Stock Exchange, is a peculiar trading environment for a number of reasons. For starters, and very much like at a regular job, traders get an hour for lunch between 11:30 and 12:30, as the exchange closes during lunch hour every day. Here is BNF, savoring a nice, steamy cup of instant noodles during a well-deserved break from trading. Another thing the folks at the TSE are particularly fussy about is limit up and limit down price thresholds for stocks. So, someone at Mizuho Securities makes a fat finger error, and the stock opens at 672,000 yen per share. This sends the stock tumbling down to 572,000, which is the limit down price for a stock valued in that price range. So you see, a stock priced above 500,000 yen and below 700,000 yen a share is only really allowed to go up or down 100,000 yen per share. It is stuck in this price range for the day. Still, Mizuho Securities had a big problem in their hands because they had created a massive sell wall 42 times the size of the number of shares in issuance. The trader tried to cancel the order, but to no avail, as there was a bug in the TSE system. Because of faulty programming on the part of the exchange, this nonsensical order to sell 610,000 shares for 1 yen apiece was in effect reinterpreted as an order to sell that many shares at the lowest valid price, which in this case was the limit down price. Once an order goes through this process, it cannot be reversed. How the programmers at the Tokyo Stock Exchange could have possibly thought this was a good idea, I cannot fathom, but these were the rules of the game back in the ancient days of 2005. While all of this was going on, the internet was going wild over this extremely unusual price action. Word gets to BNF2 that something odd was happening with JCOM, so he takes a calculated risk and decides to buy 7,100 shares. And just like that, he now owned a 49% stake in the company. Other traders start nibbling away at the sell wall too, purchasing thousands of shares. After a while, the higher-ups at Mizuho Securities give up trying to cancel the trade and decide they'll try to contain their losses by buying up all of the remaining shares. They eventually succeed in their efforts, but like I said earlier, they weren't the only ones buying, and 96,236 non-existent shares find their way to other institutional firms and retail day traders' accounts. The price shoots up, and the stock is now trading at the limit up price of 772,000 yen. BNF sells 1,100 shares and decides to hold the remainder of his position overnight. The stock is halted the next day, finally, and Mizuho is forced into a cash settlement covering the 96,236 shares in orders that had gotten executed the day prior. To add further insult to the injury, the settlement price was set at 912,000 yen per share, which is the price the stock was expected to open at before the fat finger incident sent the price tumbling down. Some banks decided to return their profits to Mizuho, but other parties like BNF weren't in such a charitable mood. So let's do the math. BNF decided to hold overnight 6,000 shares he had purchased for a price of 572,000 yen per share. This allows us to estimate the total purchasing price. 6,000 shares at 572,000 yen comes to 3.432 billion yen, or 28.5 million US dollars. Mizuho agreed to give him 912,000 yen per share, so that's 5.472 billion yen, or 45.5 million US dollars. If you subtract the purchasing price from the settlement price, you're left with 2.04 billion yen. So, in the space of 24 hours, Takashi Kotegawa, BNF's real name, pocketed 17 million US dollars for a staggering return on investment of 59.4%. Now, how do I know his real name? Well, because that's the name that showed up on the Schedule 13D filing. Like in the US, anyone who acquires beneficial ownership of more than 5% of a public company must disclose this information in a regulatory filing. The name of this document is different in Japan, of course, where it's called Tairyo Hoyu Hokokusho, but the underlying principle is the same. The media got wind of this, and, always hungry for a scoop, decided to pester the mild-mannered trader for an interview. He obliged on a number of occasions, and that's how the wider public came to know of BNF's existence. In 2009, I went on an exchange program to Japan, where I ended up staying long-term. Sometime in the summer, I was on YouTube looking for investment videos when I came across one of those interviews. Needless to say, I was hooked. I wanted to know everything about this legendary trader, and perhaps even follow in on his footsteps one day. This sent me down a rabbit hole, as I started collecting every single article I could on the guy, going through the archives at various universities, and even tracking down old magazines on Yahoo auctions, which is sort of like the eBay of Japan. Unfortunately, information about his trading strategy was sparse, to say the least. He talked a little bit about his trading strategy during the bear market following the dot-com bubble of the early 2000s, and the importance of recognizing short-term rebound patterns in indicators like the volume ratio, RSI, Bollinger Bands, etc. One indicator he seems to pay close attention to is the 25-day moving average. In the vicious bear market of '01 and '02, he would look for stocks 20 to 35% below the 25-day moving average and hope for a rebound, but he never really went into too much detail. I'd gone in expecting the type of serious, detailed coverage found in publications like Vanity Fair or Forbes, or in books, but what I got instead were fluff pieces in third-rate tabloids. The type of tabloid filled with ridiculous articles about how run-of-the-mill housewives were supposedly making millions playing the forex market in their spare time. With each article, the disconnect grew larger and larger between, on the one hand, the amazing feats of Takashi Kotegawa, for which there was indisputable proof, in the form of regulatory filings related to the various companies he has had a stake in over the years, including JCOM, and on the other hand, the caricature presented in the articles and TV interviews. He was portrayed as a socially awkward young man who didn't like to spend money or leave the house, and who doesn't have any hobbies apart from making money. Ultimately, I don't think I'll ever know if these two individuals are the same person or not, but one thing's for sure. Starting with the JCOM debacle, the legend of Takashi Kotegawa is one that deserves to be known and shared in Western investment circles.